that's going to actually trade for you. So we got Craig here. Rock on, Craig. Thank you, Braden. And we'll get started. It's 6:02 on April 6, 2023. We've got the Road Trader here talking to us tonight about the process that he went through to create an algorithm to trade everything and anything that he wanted to trade. So Rogue, tell us, what did it take?
Okay, well let's get through some basics first. Um, the one thing in messaging and calls that I get about systems is everybody's trying to build the perfect system, and the perfect system doesn't exist. Basically, you need to be in a mental state of how literally, let's be reasonable about this, because literally there's so much curve fitting, which you go through past data and you go, oh, if I just followed this indicator coupled with this indicator plus this indicator plus that indicator, and when they all agreed, then I take the trade. You've over curve fitted. The future will not reflect that. And I've seen some disastrous outcomes on institutional scale with these kind of things. So really, to start in thinking about building your system, number one, forget all the indicators to start here. Trend trumps all other indicators. Period. And that has to be kept in mind, because literally some of the greatest traders I know, and that includes Ed, who started off as a systematic trader and was very successful at it. And I'll go through exactly what his system was, because it's going to be so simple, it's going to blow your mind. So, that number one, if you're not syncing with the trend in a system, it's high odds it's in the long run, it's not going to work. The second thing, you have to really realize in building a system and actually trading a system is the law of large numbers. And what I mean by that is, let's say that I could show you a system that had 70% winners and a 2-to-1 dollars won versus loss ratio. That's a good system. And yet, out of 1,000 trades in that 70% system, one could experience 30 or more consecutive losses. And you got to ask yourself, can you deal with that? And ask yourself, how do you deal with that? Because you can build all the stats you want, and yet the law of runs, which is a gambler's term, wins out. I mean, I can go sit down at a blackjack table with a very successful strategy, but I can also lose 20 hands in a row. You gotta have some bank left after that in order to in effect rise up out of the drawdown. So managing your money and money management, which I will get into, of literally how to think about that, how to execute that, is equal, if not more important than the actual system you're trading. So, let's start with think about baseball when you're thinking about your parameters about building your system. Are you going to catch a ball with like a kitchen glove better than you're going to catch with a mitt? No, but a mitt, it's like a big paw. So it's not as exacting, but it catches better. And so that again goes to the one tendency that I want everybody to just leave this with: don't curve fit. You've got to let the underlying money management take care of all of this, because otherwise you're going to go tapioca. And so let me get into a couple of more specific things. Hold on one second, guys. So first of all, let's talk about actually how you bet and how much you know to bet on the next trade. And that's what I call fixed fractional betting. And the way you do it is not, let's say I have a system and it indicates that the optimum is that I bet 2.5% of my bankroll on each trade, and that risk is literally entry and then mark to market versus my stop. And that will obviously, that fluctuates as the trade goes in your favor and you move your stop up towards where the price is, or down if you're short. And so this is a very dynamic thing in which you don't, again, because of the law of runs, you're not going to bet 2.5% of your bankroll. Let's say we start with $1 million, and so on that first trade, I'm gonna risk $25,000. So the next trade is not off of the million. You've got to take out that $25,000 from the million, and now that's your new bankroll. And your next trade is you're going to bet 2.5% of that figure, and then you're going to take that risk out. And your next bet is, so you're only betting a fraction of the funds that you have that are not at risk. Therefore, this serves to really help overcome your rate of ruin, your chance of ruin, because obviously as you go into a drawdown, you still got all your risks that you're taking out, but your overall balance is going down, and so your trades get smaller, which is the exact opposite of what I've seen for 40 years of what I call the get well quick trade. It's like, oh, I've lost 10 times in a row, so this 11th one's bound to work, and so you bet a ton of money. And that's really the tapioca trade. You're gone. That never withstands the law of large numbers. It reminds me of after you've lost 10 times in a row, I think it was John Templeton who said the four most dangerous words in investing are, "This time it's different." So I'm going to do something different. So you've got to be very disciplined about this to be systematic. And so and we'll do questions later in which absolutely I can help with the specifics, but that's why I don't want to start with building a system with the system. I want everybody to know that really money management reigns supreme, but it's so effective that a guy like Ed Sakota, Ed could. Somebody's got a bunch of background noise coming through, FYI.
Craig, mute your mic, bro. Don't be gay.
Don't be gay. Okay, that sounds better. So, literally Ed's original system was based on a very simple system that was articulated by Richard Donson. And, literally that was simply, let's just say we're going long. And these were all futures, by the way, not stocks. But so a stock, or let's say it's soybeans. Soybeans hits a 6-month high. That system would buy, and its stop would just automatically be what was the low of 3 weeks ago. And as the market advances, you just keep moving your stop to that 3 weeks ago point. And Ed made a whole real lot of money just using that simple of a system, and it worked just the opposite and just as well for shorts. And the way that system made money, because it's so simple, it was indeed the money management that I was just describing to you, because it was a system in which it took a lot of losses, but the winners were just massive and just went on and on and on and on. And as I was talking earlier to Bayo, Steve, that the fat middle is where the money is. And so, in the end, let's say that Ed had a position on that lasted for 9 months, and actually we had positions that lasted for years sometimes. But ultimately, to get stopped out, we're going to give up from whatever the high is on a long to where that 3 week was, that 3 week stop, and but you still caught the fat middle. But you can't look back and go, oh shit, I had more, because that's dangerous thinking. Because if you start screwing with your stop, how the hell did you stay in the trade 9 months or longer? You did it by just letting the system do its work. You can't override your system. If you're going to trade a system, you've got to let it run and just absolutely, let it do its thing. Tinkering is disaster. You guys have probably heard of the principle of Occam's razor, which it states that the simplest solution is most often the correct solution. And that explains right there on that system I just described that Ed Seykota made hundreds of millions of dollars with. It was the correct solution, and it was the most simple solution. In effect, the fewer variants in your model, the better it's going to perform. So keep all of these bigger picture macro things in mind, because they really are important. If you are really interested in building a system, the system that I have that primarily just automatically changes, trades indexes, index futures, and it does it continuously 24/7. My components of that are literally, I'm using it. It's going off of a 5-minute time period. There's a 10 SMA, and then there's MACD, and that's it. That's all the elements that are in there. Okay. Anybody have any questions at this point before we go on here?
No, sounds great so far.
Okay, so and again, I've made the point, but I want to really reemphasize this. Moving from system to system will give you a shaky foundation at best, and probably not a foundation in which you'd have a bed on to sleep under a roof eventually. And again, you've got to just stick with it once you commit to it. But if you're sticking with something with too many components running it, you're in effect at that point you really are trading multiple systems as one system. So that's in effect a real danger too. And as I've said many times, pain is the greatest teacher, and so let the pain I've experienced in 40 plus years of trading stand in for yours, because literally one experiment that I did with Ed, and I also did with Pete Stottlemyre, is just to show how random things can be. We actually put up a little money each, and just an account we could follow with each other, and we called it trading for losses. So we were actually going counter trend or counter signal, and ultimately ended up pretty much losing most of that money. Now, a guy who worked for me and still does a lot of work for me in Chicago, actually, who worked on that project with us, Steve Moss. He came up with a system which still performs to this day, that he called Fade Trader. And what he did is he bought most of the, like 5 to 10 of the like Stocks and Commodities magazine, futures magazines, where they, you go in and these guys are selling these systems. And so he set them all up, and wherever they said buy, he sold, and wherever they said sell, he bought, and he's killed it with that. And the reason he's killed it with that is, again, these things are way overcomplicated, the ones that are for sale, because guys they think that they need to have some kind of esoteric math and explanation for what they're doing to dazzle their buyers. And all it does is what Wall Street has done for a long time, and that is, the goal is to separate a customer from his money. That's all there is to it. So another thing, and it's about money management and behavior. So if you are trading a system, you've got to take every trade. No, I feel like this one's not going to be good, because trust me, I've got the experience. The one you don't take is the one that will really pay. Period. So the mental game is your biggest obstacle in trading, systematic trading, etc. You literally have got to get to where it just runs out of sight, out of mind. The less you look at it, the better. Literally, both Rich Dennis and Ed, none of them had quote machines in their office. None. So they weren't watching. So they could actually let their system work. I don't look at my index trading system. I literally maybe once a week I'll see what the result, how the results have been, but I'm not actively watching it. And simply as disciplined as I am, and that's simply just through the lessons of pain of not being disciplined. The more you look, the more you think, and the more thinking is dangerous. So keep all of these things in mind, because it's absolutely vital. And so going back again to your basic design, keep in mind that markets move gently in their place and violently from place to place. And, you want to capture that violence, but manage your money enough to where when you're in that gentle place, which is a nice word for a chop fest, that you keep capital around long enough to catch that violent trend move. So again, that's why, everybody wants to hear like this ideal system of you buy here, you sell there, etc. But that's less important than managing your money. It's not difficult, but it just takes a while to comprehend the concept of basically fixed fractional betting with a declining balance based on your risk outstanding. So I see a lot of guys, and I'm starting to see more and more guys in the misfits, kind of get away from this. The whole idea of being a top or bottom pickers, and old saying, top and bottom pickers become cotton pickers. And well, let's don't go into graphic details about bottom pickers. Okay, any questions, guys?
No, sounds great.
Okay, so in looking, at how you want to define, when does a trend begin? What does it do? First of all, are you going to literally let your system do it, or are you going to systematically eyeball it off of a chart? And if you are systematically eyeballing it off of a chart, you better be very clear in your mind that you literally can be objective, and that takes that doesn't happen overnight. Basically, certainly I've been at the point for quite a while, and Ed, well, you just throw down a chart in front of him, and he'll tell you buy or sell it. It's that simple. Gun to your head, what do you do? So and there are patterns that we can use to educated stops. Again, not perfect. Just kind of think of technical analysis as simply, the forensic science of discerning what the market's fingerprints are showing you. But, sometimes you see the fingerprints and you still arrest the wrong suspect. So, again, nothing is foolproof. What we're trying to do is always get the probabilities on our side. And probabilities, are never perfect. So that's the first thing that I want, people to get through their heads and into their heads and into their trading is, really, think about what is it that you want in this game? Do you really want to win? do you really like money, or do you? And one of the things that Ed and I were really into is just getting into your own head, and Ed was especially in need of making sure that his head was clear, simply because he had an extremely abusive upbringing, and that kind of stuff. Yeah, you can slough it off and say it, but we've got all these tapes that we don't even know that are running in our head, and self-sabotage is pretty much suspect number one if you're not doing well, and so literally we can't really have a discussion about following a system without also having a discussion, which is an ongoing discussion, about trading psychology and your own personal psychology. I mean, Ed did all kinds of things. I mean, between doing shamanistic breathing, which basically puts you into almost an oxygen brain starved state, which you hallucinate, or whether it was taking massive hits of acid and mushrooms. That's how he would get the shit out and flush it down the toilet. But again, it's not easy. But becoming great at this game isn't easy. As I've often said, this is a hard way to make an easy living, and I say that very seriously, because it takes just a lot of personal experience and mostly a lot of pain to hang in there and really understand where you're hurting yourself. So I'd like to hear, with all that preamble, I'd like to hear some of you guys' ideas of how you're thinking about building a system.
John, if I may?
Absolutely, go ahead.
Hey, it's Neil.
Hey, Neil.
So John, how's it going, John?
Good, man. Good to hear you.
So, John, one of the problems of building a system there's a risk on day and a risk off day, right? How do you pick if a day is going to be a risk on or risk off? Is it look at the macro, because I've noticed on risk off days, you let's say you're doing the 5-minute chart, 10 SMA, as you signal to buy something, right? And you get chopped to that, and you're like, oh my God, this is not going to work. And then you start to fit, and then you fit, and then you fit. And then you fitted your system so much that when it moves violently, you've missed that whole move because you become too conservative. How do you overcome this?
So, very good, very, very good question. And the way I look at it is I don't think in terms of, is this a risk on, risk off day? Because that's just too subjective. And that is something that I see constantly being pumped by Twitter guys, who, by the way, I think are full of shit. But people, they're getting subscribers by telling people what they want to hear, not the words they need to hear. I want you to hear what you need to hear. And if it hurts your feelings for a minute, that's okay with me, because eventually you're going to thank me and we're all going to go out and have beers together. So, I mean, part of working with me is, accepting that I'm going to challenge a lot of you initially, because it's you that's the issue. So going back to the 5-minute system you're talking about, Neil, I make no distinctions. It just does it. I trade all environments. Like today, for instance, there were three where there were two really good trades and one decent trade. So all made money. The first one starting early this morning was a short in the indexes. And then it got stopped out, and then basically next candle it bought and it scaled, and then it got stopped out. So at break even, and then to end the day, you just had a barn burner long that literally just went pretty much to the close. So. And that we could describe that, at the end of the day today as a choppy day, and yet, moving down from the macro that it was a choppy day to the micro, the chop had, three very nice trends in that chop. So, the key is what time frame are you trading your system in? Because we can look at a daily chart and just, look at bars or candles and go, oh, nothing much happened that day. But if we zoom into to a 5-minute chart, you're like, oh man, there was huge opportunity all day. And so, knowing what time frame you're operating in, it matters. And subjective things like risk on and risk off, I just don't know what to do with them because, let's say you start with a risk on day, and then some Fed official says something bearish, and now all of a sudden it turns into a risk off day. And so you can't account systematically for the random noise, other than that you're just knowing that you've built a system that ultimately will take advantage of it.
That makes a lot of sense, John. Thank you.
Oh, you're welcome, Neil. It's a very good question, and really, as of late, I would say that my best trading days in terms of the index system tend to be ones that if you zoomed out on a time frame would just look like a chop fest. But it's only a chop fest if you're married to one side of the market or the other. And once you have a system trading it for you, there isn't any bias. Because literally when we're talking about a system, we're talking about divorcing our trading from ourselves as a human being. Just literally let it account for everything, and leave your judgment outside the door, because the other thing psychologically nowadays is, and I think the guy you guys follow, and I read some of the stuff that comes by, Mancini, he's always talking about trapping action. And, and I think he's absolutely right. These algos go and sniff stops and run them. And I think that, like, on a thin trading day today, it was just all algos. I mean, and they were just going from stop to stop to stop to stop. Clean them out low, clean them out high, clean them out low, clean them out high. So it's that's not a bad foundation to understand that you're going to get trapped, that there's traps, but also have a system that doesn't worry about that, okay, fine. If it was a trap, if it gets above if it gives me let's say it's a trap down, it gives me a single long, then I'm long. So I'm not having to think, oh, is this a trap or not? But it's not inaccurate to say that this market is extremely trappy, which I think also has come along with that. Just liquidity. I mean, this week was a joke liquidity wise, but overall liquidity has declined substantially since the market highs. I mean, now that it's not the easy money, just always get long, and just hold on for dear life, and it eventually comes back. All those guys finally gave back everything they made, and they're gone. And so just liquidity in general, is down, and an artifact of a bear market, which by definition, at least as far as I'm concerned, we're still in one. A bear market by definition, liquidity drives up. One of the reasons being that these funds holdings are all declining, and so they have less money to play with. And so the less money that there is out there to play with, forget the Federal Reserve. I mean, certainly headline wise, that moves things, but the real liquidity is, hey, how much money is on the sidelines? How much money is left for these guys to make trades with? And right now, it's not nearly as much as it was a few years ago. And so, understand what that means to you. It certainly means a lot to me because, I'm finding myself in, not in say the Apples, or the Nvidias of the world that have a lot of liquidity. I can move size relatively easy, and by size I'm talking about starting to trade with say $20 million or more, and that's just boom, and there's virtually no slippage. And it used to be that the tier of stocks just under that you could do that. No longer. All those orders have to be worked, and they take time. And we've gone from a market in which I could expect to see all my fills on my Goldman Messenger, probably within a minute, 2 being the max. And I mean, now, sometimes it's taken hours to actually get enough on for it to be a meaningful position. And so that means something to all of us. It actually, one of the things that's really amusing to me is how the math of the VIX is just so broken. Because you think that we don't have any volatility, on a VIX almost down to 18 now, but intraday there's a ton because literally the market is literally trying to find where liquidity is because there just is none, and now. There's a huge advantage if you're trying to build a smaller account up by taking advantage of this, because you don't have to worry about that. And especially if you're trading index futures, the liquidity there has declined, but not nearly to the magnitude it has really once you get away from basically the Dow stocks and the FANGs. And you could trade a system like I've described with anything that there's enough liquidity in there to get filled without a lot of slippage. So, it basically, you want to build a system that doesn't work just on one instrument, that basically has universal application. And again, that it gets back to curve fitting, and so again, on my short-term 5-minute index system, I have other than price, I've got basically two components. I've got the 10 SMA, and then I'm running MACD, and so I use MACD not per se for signaling itself. I use it mostly for money management. So, let's say today we were running into, and I'll quote. This is all Pacific time. So 9:45 a.m. on the ES, we made a high, and so did MACD. Then we made a new high at 10:30, but MACD not only did not confirm and go to a new high, actually, and so basically my crossover line is red, and and the line that gets crossed is blue. So you made a new high, but not only did you not confirm it with MACD making a higher high, the red line remained under the blue line. And so on a money management basis, when that happened, it triggers a scale. It's like, okay, we're still in this long, but this is where you start to reduce. So this is how I'm using it. And then you went to yet another new high at 11:30 a.m. Pacific, and MACD was even lower still, and the red line was still under the blue line, which triggered basically scaling down to a small runner, which it looks like that runner for the most part was done with when it actually flipped lower and then actually turned into a short, which really didn't go anywhere. It didn't pay really at all. That happened in the bar at 12:05 because the market just kind of meandered sideways the rest of the day. So for MACD, I'm using it less for triggering a signal than I am for managing positions I have on. And everything I just said would be applicable flipped upside down on a short trade. All right, let's hear some questions. Come on, guys.
Hey, John, it's David.
Hey, David.
Hey, really enjoying your talk. So if you say that tinkering with your system is kind of like the worst thing possible here, how did you land on the configurations that you have? Like, how much testing went into that before you were confident enough to have it running 24/7 for you?
It's a very good question. Now, in my case, and I understand, that a lot of you guys are just starting on your trading journey and are a bit capital constrained, and so this isn't realistic. But basically, I just tested ideas in the market, and took every trade, and then literally said, okay, this pays. And then literally, I am not a computer programmer. I know math very well, but I don't program. But my guy in Chicago, Steve, does. And so, I said, okay, I just want this thing run 24/7. Do it automatically. But I think that nowadays, David, that there are enough of these, and I think that even Thinkorswim has one where you can trade, pretend money. I think you guys know better than I do, but I think that there's a module there in which you could set up and make trades that are not on real money.
Yeah, you can backtest now very easily, John.
Okay, well that's good. I mean, that platform has pluses and minuses, but it's overall a good platform, and I look forward to seeing what it does, what they do with it if Schwab survives. I think as you guys know, I posted in the room that I pulled everything out of Schwab. I had some money over there too, and basically, I'm from Texas, so we shoot first and ask questions later. But either way, I think that platform, if something happened with Schwab, would get bought by somebody that can back it. But that's good. So when you back test it, it goes and gives you your stats, et cetera, et cetera.
Oh, like I'm sure, like you could go back and look at it through that program.
Okay, so it doesn't spit out like, okay, your win rate is this, your dollars won versus loss is that, because those are super important components, so that you then understand, how to apply fixed fractional betting on a declining balance to it. Those stats really matter. I mean, God, Rich Dennis made a lot of money, and I bet I bet he made money on 30% or less of his trades. So no, it's one thing to be able to do the signals, but you've got to translate that into that usable data. It's super vital. And so it'd be there's got to be some kind of platform out there that you can test historical data. Yeah, again, just I caution everybody in doing that simply with don't curve fit it too much. Find the simplest thing you can do that works, and then apply money management to it, rather than seeking perfection, because it doesn't exist. And in fact, just remember now, there's tons of algos that actually fade signals. They know the signals. These guys, the sophistication of some of these things that you're playing against are amazing. That's why, literally, you got to trade like a robot, because that's what you're trading against.
Yeah, that makes sense.
And so literally, it's just like when you have sex and you don't know or wear a condom, and your condom is your stop, which again is size based on your money management algorithm, which in my case is fixed fractional betting. So go ahead. Sorry for interrupting there.
No, I mean that honestly all sounds great. The only other thing I was going to ask was, so like if you have this algorithm that's like running 24/7 for like specifically index trades for you, are you running like different stuff on like other commodity futures or like daily stocks? And if so, like what percentage of your trading at this point is all just like algo based compared to like your discretionary like mindset during the day?
So good question. So I used to trade some of the more liquid futures, bonds, and gold, even silver, and it worked great. But literally, just I didn't want to have my capital so dispersed, and I can by just trading, ES and NQ, um, you know, so many of these markets now. Like I can tell you, if Bitcoin's down, stocks are down, gold's probably going to be down. So I'm going to capture most of that anyway. There's excuse me, there's been a convergence of the markets, and that is because they're all getting traded by the same damn algos, and so that they're basically, it's almost we're getting closer and closer, and it's a shame, but to almost a unimarket, and it's just based on like we started off here. Are we risk on today or are we risk off? And all those markets are running the same direction, and so I just found that right now some of those markets I just mentioned, besides the indexes, their liquidity has absolutely lessened, and so the liquidity I need to retard slippage, which again, that's slippage is consequential. That is money out of your pocket, and so I get the least slippage out of those two, and so that's why I'm only doing it in those two now. But indeed, it is applicable. And based on your trading size, there are more markets that are open to you to do so.
Yeah,
John,
makes sense.
I wanted to ask you, how do you trade binary events like FOMC? I mean, if your algo is running 24/7, how does it adjust to, because you'll be stopped out in that first candle, right?
Absolutely, and yes, those are the events where if it triggers a buy signal, you're going to get slippage, and if it triggers a sell signal, if it triggers a stop, you're going to get some slippage on it, and that's just the cost of doing business. And other than that, I just ignore it. The system is not aware and doesn't care. And over the long term, I had my guy Steve go through it and and go back historically, event wise, and look at it. And by just continuing business as usual through these, if you just isolated those times, it was still quite profitable.
So basically, if you were in the right direction, you made a profit or you got stopped.
Exactly. I mean, it's like you just described. It's a binary event, and let's say that I'd already gotten a long triggered, and then a report comes out that says, oh, the Fed isn't going to tighten anymore, and the stock runs up. Then I get the benefit of that. Now, if I'm long and they say we're going to tighten more, okay, I get stopped out with some slippage, and so I have to bear the burden. And this is just what we have to personally and psychologically accept. And think about a casino. a casino, they've got to accept when the customer wins. So that's a loss to them. But they know the law of large numbers is in their favor. And sure, in blackjack, sometimes somebody's going to get a blackjack, and you pay and you keep going on because the probabilities are on your side, and so the mental state that I want you guys to embrace is don't try to beat the dealer, become the dealer. Think like a dealer does. The dealer can't say, okay, well, we just lost 3 hands in a row. I don't think I'm gonna deal cards for this next round. You can't do that. You have to continuously deal. And so, that dealer mentality will serve you well. Like, okay, I'm not the player at the table. I'm the dealer. I'm the house. And I know that my system is going to pay off on the law of large numbers. And so, what I'm getting at here is not a way to get rich quick, because that's very difficult. But it's not nearly as difficult to get rich slow. Simply don't trade as large, take every signal, manage your money, and time and the law of large numbers will take care of you. I promise you. I've lived it, and it's like all you guys have probably seen some of these charts or some of these statements on compound interest, and it's like, yeah, compound interest is great, but the first 40 years are tough. Because you're getting interest on the interest on the interest on the interest on the interest, and that's the way you build wealth. It's not a good thing when one of our guys says, oh, I had a $20,000 bankroll and I put it all on this and now I got $100,000, and everybody's high fiving. I can just tell you, in a year that guy's not going to be around. I've seen this movie too many times.
Rogue, and please jump in and tell me if I'm wrong. It's Dan. But
Dan, it's you. You're definitely wrong.
Yeah. Well, and one of the things that I think is a big misconception about automated trading is that it's sort of going to catch the big, huge moves, and it will at some point. And I think the comment on how do you trade something like FOMC or a binary event, the vast majority of automated strategies are going to lose those events because they're not meant for that. They're meant for the day-to-day cash flow grinding, and that's sort of the key here is the system, in my opinion, should be one that can make money on the days where me sitting here can't do better. And that I think is where I think a lot of people get tripped up, is that they want it to make money on those huge days, the huge trend days. The huge trend days, I mean, those are easy to make money yourself. It's the days that are back and forth and, where I think something like this is advantageous. And I think that's more a focus, should be the focus than, catching the days that are the bigger ones.
Well, this certainly catches the big ones too, but it does. You're not wrong, Dan. It does operate well in a chop, especially given the described liquidity situation in the markets nowadays.
Well, I guess my question here would be then is do you look at the automated system as your breadwinner, or do you look at Rogue clicking button calling Goldman as your breadwinner?
So basically, I look at the index system as just an annuity that just keeps paying and paying, and I don't have to do anything.
That's exactly what I thought, and sort of, that's sort of the way I looking at an automated system is, that's in the background sort of as a cash flow generator.
That's right. And on a day-to-day when I'm screwing around taking positions, basically I'm just going off of patterns I know. And I know, basically if there's not an obvious stop scale area for me, then it's not a signal pattern. You've got to have a signal pattern. And some of these things can be very simple. Let me just describe one. And we did ultimately automate it, but we found that we actually did better trading it discretionary. And it's really simple. It's just simply I call it a hook pattern. And that pattern, if you guys have charts, here's one on NVIDIA back on what's this date? The 13th of March. So you have a market that's strongly been trending up, and now you ran out, and if you're looking at that, you can see that off to the left, there's a gap, but there was kind of a reversal day back there that there was probably some obvious stops on it when it picked them off, and then it reversed up and it closed higher in the day, and that's the key. These are trades that pretty much this kind of trade I only do on the close because it's not a signal until the close, and so simply that's either a buy or an add-on to an existing long. And literally your stop scale is basically starts at the low of that hook day, and then goes a point below it or so, just so I can scale out if I'm wrong. But a signal that simple paid great. And again, it's simple things like that. Like I started off with, that trend trumps all. And so now I've got a trend. NVIDIA at that point is clearly in an uptrend. And so now I can take a signal like that and have pretty good odds because again, I've got the trend with me. It's a cliche, but the trend is your friend. And if you start signaling in the direction, taking signals in the direction of the primary trend, you're going to do much better than trying to pick a top or or fade a trend. And I'll credit this to Ed. He said, "No, I don't want to pick a fight with a guy on the beach. I want to pick a fight with a guy who's out in the water is about to drown, because I can win that one." And so, in this case, in this strongly trending market that NVIDIA was displaying there, the shorts are the drowning man, and that's the fight you want to pick. And the same thing, by the way, on stocks that are in bear markets, and there's going to be some good opportunities. I know a lot of you guys have been on these, housing financing stock shorts, and it's probably time for them to run the short stops out, and then you'll get a reset it, and it would be lovely if you got a hook day down in it after that happened. So it's really simple stuff. Overall, when you're looking for patterns, I like when I see a stop run and then it just absolutely rips their face off by going the other way and closing higher on the day. In the case of this NVIDIA chart.
Hey, John, it's Matt.
Say that again. I'm sorry.
This is Matt.
Hey, good.
Hey, just to clarify, a lot of this is let's make this free, right? I mean, is that one of the big things that the algo that you've got running? Is it let's make it free first?
Yeah,
we don't need to worry about it.
Yeah, that's why it scales and then moves the stop to break even, so you get a free look. The sooner you can turn something into risk free, the better. Because once you've got it on risk free and you've already paid yourself, you again, it goes back to psychology. You just don't care what it does as much anymore. So that's well stated.
And for the algo that you've got running for futures and that, I mean, you're not taking it at 100. Is there some prescribed?
Say that again. I was getting a spam call on it.
I've got more than enough of those. I've got my daughter calling me too. Hey, this Toro isn't, well, never mind. But for the like ES trades that you got going on as auto, it's not. Hey, I want to take half at 100. It's I want to take a third at something. I mean, is there a prescribed methodology that you have in order to get to that free?
Well, yes, there is. I have specific scales that now over time they've certainly adjusted to the level of these indexes, because obviously they were different, at least point wise, when the market was much lower than it is now. But literally, what I want to do is simply, and it's a pretty simple formula, really. I mean, I just want to take how much you take, how much is at risk, and when I can literally bank as profit a quarter of that risk. That's scale one. So I take a quarter off, and then when I get to half of the remaining risk, then I take that, and then basically you've scaled 3/4 at that point. Stop moves to break even, and you let it run, and then you adjust the stop adjusts based on pattern. So like today again, if you look at this rip in the ES that triggered at 8:05 a.m. Pacific, it just ripped, and then it bull flagged, ripped again. So during the rip it scaled, and then basically the stop had gotten pulled up to here. Let me look into it. Right around, probably on average around 41.27, and it would have been picked off there, except that it not only got out of that position on the signal I got to go short at 12:10. It not only that, but it literally reversed. It reversed and went short, and that trade did not make money. So,
it's like the shop trade that John had called out yesterday or the day before.
On shop.
Yeah, any of these trades, it's scale as soon as you can, or even gov with SPX, right?
Yeah,
it's scale when you can, and get free as quick as you can.
No, exactly, and shop is a great illustration of this. Let's just say for grins that we had a system that went off of a 10-day moving average and a 50-day, and
right.
when and the rule is when it goes above both of them, you buy, and vice versa on the sell. So today, if you had come into the day short because of the way that it closed yesterday,
yep.
Then shop opens, goes down below 44. If you haven't scaled down to where you're riskless, on that, you're doing something wrong. So now it closes up on the day, and you give no shits.
Yeah, no, I had 50 yesterday. I scaled, I don't know, maybe 30 yesterday. Another 15 this morning, and on its way up, bailed out of it. But yeah, I'm just looking at, in general, what that pattern ought to be. And if there is a percentage or what that scale, how that scale looks in an algo, right? Because you're always looking at what do I have left, and of that I have left, what's my actual exposure to real capital?
Right? No, that's right, and that's why especially it wasn't necessarily true 10, 15, 20 years ago, but the intraday volatility, which the VIX gives no clue about, makes for on individual stocks you've just got to scale faster now. It's a very hollowed out market. So you've got to take most again now what if you have a methodology in which you're right 70% of the time, then you have no worries. You ought to you should take that profit. Now if you have one that's only 40% right, but captures, you make your money on the big moves, you can't do that. You're going to have to hang around and see if you get a trend. So again, it's all about defining the time frame that you were trading in, and sticking with it and not mixing them. So if you're trading off of a daily chart, then trade off a daily chart. If you're trading off of an hourly chart, but stick with whatever your time frame is, and take the signals. And what I'm saying here is that in this market, I think that reducing the time frame, zooming in, not from dailies down to much shorter term, signaling is the way to go right now. simply because they're just, you know, it looks to me like, you know, they're on this shop trade. There wasn't any liquidity to buy until below 44, and you know, after of course, after they ran the stops from that obvious pickoff point from the March 28th. That was just a classic move. But you gotta be zoomed in now, you know, on these things, because they just it's just it's just so much. It's both faster and thinner all at the same time.
The shop trade that John D. Clued everybody in on, he was pretty clear this morning that he took half of his trade off immediately this morning.
Okay, so on the open and it went down and JD got out.
Of
a bunch of it.
Yeah, he had 100 on. He said he took 50 off right away and he's going to let the rest go and see what happens. I don't know what he did with the rest of them after that, but he was in for free at that point.
Well, see, there you go. Build a, you know, that's the right mentality. Build that free ride really quickly. You know, it used to be, and you know, this certainly was our style during the, you know, the real go-go days of commodities. I mean, we had a full position on, and then, you know, we let it form another pattern, and we just put a whole nother trade on against that pattern and let them all run. But you can't do that. You just can't do that now.
As far as the larger time frames, looking at things, I know Gov, when he looks at larger time frames for his entries, but then he refines his entries by going down to the shorter time frames.
See,
he goes down to like 5 minutes and 1 minute at the last second to decide where he wants to get in on his trade, and then he goes back out to the larger time frames to decide where he's going to get out of things.
See, now I like that a lot because he's making decisions in the smaller time frame. But whether he's getting with the trend or whether he's getting with a pattern that may be a contra, you know, as long as he's consistently doing it, that's fine.
He likes to go pick the bottom of moves, the top of moves on, you know, on a bigger time frame. And I know Aaron Naro likes to do the same thing as well. And I know David is trying to get better at getting on those trends, like you always talk about throughout the day, because it's tough to buy in or sell with when things have been going for a while. So.
It is, but that's a very good way of thinking about this, because no matter what the larger trend, the larger pattern, you know, ultimately asserts control, and if you can get in sync with that pattern with the smaller time frame, all the better. Especially the way this stuff works now. You know, if you're getting in sync with a larger time frame pattern, but you're setting your risk based on a shorter pattern, I think you're well served in the type of market we have right now. You know, that wouldn't have been the case, you know, a decade or so ago, but it certainly is the case now. And you know, that brings up a good point that there's never, you know, a moment or a time that we can just, you know, check out. I mean, you've got to you know, stay in touch with the changing dynamics of a market, and so certainly, you know, what he's doing with that has made a great adjustment to the change dynamic. I mean, both, you know, the market is less trendy, it's less liquid, and so the longer the time frame you're in, the harder it gets. It's much easier on a shorter time frame right now.
Thank you for addressing that.
You betcha. Okay. Any other questions? Because literally, I think it would be very useful for the guys of you that want to build a system to, in effect, start building it, and then come at me, and I can look at what you're doing and literally blind spot you and say, okay, but think about this, that kind of thing. I think that would be very useful.
Yeah, that'd be great.
Because I do think that everybody ultimately, no matter what your capital base is, you're gonna be well served by having some, a pretty good hunk of your capital traded systematically. Because the longer that you're in this market, that you have to. I was in Japan once, and I was trading to a couple of trading houses over there, because Ed and I used to run quite a bit of Japanese money too, and so this one guy said, Atwell-san, sometimes when you ask the question, who gets fucked next, you must look in the mirror. Because we're all going to get, at some point, you're going to be wrong. And so you've got to have a strategy that accounts for that.
Yeah, based on that, I know most of the brokerages that we all use, I mean, whether it's TD, Bob, IB, and any of these guys, they all have algo traded portfolios. Are they? Do you know if those are worthwhile or not?
I don't know. I had heard that, and are these black box algos where you don't get to see what they are?
Yeah, they're just black box.
Yeah, and they're black box. And do they provide you any statistics about them?
I mean, you get to see what your balance is.
Okay, but they don't say that we tested this over a 40-year period, and this was the percentage win. This is the dollars won when we win versus dollars lost when we lose.
I don't know. I honestly don't know if they have any kind of back testing in their
yeah, I'd be pretty.
The way they define it.
I'd be pretty leery of that. That echoes a lot to me of a phenomena that was around in the 80s and 90s of these black box systems you could buy out of Futures Magazine or a couple of these other magazines that covered the markets, and but you had no idea what was in them, and most of them were absolutely curve fitted and blew up. And again, the idea is that the fewer things that are triggering the signals, the more robust it's going to be, and it's going to serve. Again, what you want, what robustness gets you is it lets the law of large numbers number and time work for you, not against you.
Yeah. So my fear is always, are they front running what they're, telling
Oh man,
the dollars that they're holding? Right?
now somebody on Wall Street would never do that.
No, well, it's illegal. It's illegal. You can't do that.
Yeah, it's illegal. I've never noticed that stopping anybody on Wall Street. It's not illegal. It's not illegal till you get caught.
It's kind of like paying the hush money, right?
Mm-hmm. Yeah.
What politician would ever do such a thing?
Rogue, you remember in the S&P pit, Praz was one of the biggest traders in there. He would have Goldman brokers on the other side of the pit offer fake orders on the other side for him, so that he could buy stuff down for himself. He would have Tia, which is a Goldman broker. He'd be like, offer 200 at this price, and then he would be buying them back as a local at the same time.
Yeah, because those
guys. This is going back to the pit days.
Yeah, they would flash in that size and never get filled because the market ran away from them. And
everybody saw Goldman offer 500.
Yeah,
and it was really just a local in the pit that put the order in, and then he was buying everything back from everybody else scurrying from him. It goes back 100 years.
Yeah, and then at the end of the day or end of the week, they divvy up the split.
They'd get a real nice car for Christmas.
Oh man, the stuff the stuff I saw on the floor, in the cloakroom, where you kept your jacket and stuff, of guys, paying each other off, in cash. I mean, it would be a great movie.
When this stuff first went electronic, the guys that own TT Trading and a guy in Canada used to do the same thing. They'd put orders in, literally sell 5,000 contracts. They would sell them into the market because they wanted to run it in one direction. And then they knew that they were going to be able to buy 10,000 the other way.
Oh, old trick.
These were the guys that own the DOM systems.
Well, right. And so you beat me to it, and I'm not surprised. That's one of the problems with using flow, because that's an incredibly great way to absolutely engineer, because there's so many people following flow now, to engineer exactly that scenario. You go in and you buy a whole bunch of puts or sell some calls, and everybody runs away from that market, and their exposure on there is a million shares, and they tank it, and all the way down they buy 5 million shares. That game it still exists. The pits don't, but certainly flow is used to deceive in a major way. And believe me, I was invited into a number of what I'll call trading mafias, because that's what they were. I mean, this is Chicago after all. And I declined, but I always declined politely. I always said something like, "Well, I never was much of a family man," because I knew that in that game, if you screwed up, there are things that happen in an alleyway, repercussions to it. And especially if it came from guys that you knew were using the pit, which was really common to clean up dirty money. I mean, one way to clean up dirty money is just to lose it to somebody who appears on paper not to be associated with you, but they really are.
Yeah, those are the cousins you don't want to meet in that alley.
Exactly.
Yeah, because they'll close that connection.
That being said, when things get to like those big levels that everybody looks at, and then all of a sudden you see that spike through it, those are a lot of times the times that you want to take a shot at reversing the market, because
there's no question
they're chasing stops there.
No, 100%. I mean, that's a good strategy in this market. I mean, and again, the pickoff move now is starting to be a pretty good fade. Just from I don't have stats on it, but I sure have a lot of visual evidence of it. So the key is if you could systematize that and just let it run on its own on the market you choose, that would be great, because that way you can deploy a risk management algorithm behind it to get rid of your risk of ruin. But I think that's a very effective signal nowadays.
Gov is excellent at sitting there and waiting for those levels to do that and percolate for a second and not necessarily get in, right when it runs through those areas, but when it runs through those areas and it starts going back the other way, then jumping on board. I know David's in the room right now. He might be able to chime in.
David, you have anything?
Not like in regards to what he was just asking, honestly. I've got some more questions about like some breakout stuff you do, but mainly I've been like, I'm a heavy fib trader, and like I'll look for exact levels to trade, or just like general areas, and like I'm definitely more aligned with trend. Like I'm trying to follow like a trend instead of just like I'm not the best in choppy days, but just continuing to work to get better at all that. But no, nothing much on what was just brought up.
Well, one thing he did say, which is really important, and that is, Tom Petty said it best: the waiting is the hardest part.
For sure.
And we've got to divorce ourselves from the need for constant action. You'll notice there are days I'm very active, and then some days I just don't post anything because I'm not doing anything, because there's just I wait till I get literally very much like described of going from the daily down to the 5 minute. I wait till I've got my prime setup, and then I jump aggressively, and so I'm not bothered by having to recover from a bunch of paper cuts from being overly active. I can keep my mind clear by inaction. Inaction is there's your key to profitability right there. It's the shit that you don't do, rather than and waiting for the stuff that you should do.
Yeah, that was something I learned. Like I'm still learning, obviously, but like it dawned on me about a year ago. It was just like I was missing the big days, and it was because I was like drained of mental capital from chasing around little things. And like I had to do a little bit of searching to find what my perfect situation and setup was, and then like just having the patience to wait for it. And when like they do show up, it's a little bit easier to be robotic about it, because it's like you've seen the pattern, you've seen the setup, you know what to do, and you know the odds are in your favor, so just let it ride. But learning to not burn my mental capital was huge.
Yeah, God, that is so well said, and you know, it really reminds me of a trader that I helped a while back, and his problem is he was, you know, carrying, you know, a pretty good load of stuff that was short-term trades, but he's carrying them overnight. And so, you know, you come in and, you know, I mean, the open now is just so ridiculously thin. I mean, the bid and offers are wide. It's nuts. And so, you know, and often it opens counter trend. And so now you've got, you know, he would come in and just have blood on his sheets and couldn't mentally, you know, regain the mental capacity to take the next trade right in front of him, because he was so focused over here on all the red. You know, it was like, well, did you ever think of just not ever carrying positions overnight? Oh no, that never really occurred to me. You know, like, well, with your style of trading and your mentality, that you've got to do that. Start fresh every day. And he goes, yeah, but what if it gaps up my way? I'm like, so what? It'll make a pattern, and you can, and then it'll either continue or it'll fail. But your problem is just you can't handle the adversity, you know, on the open sometimes. And so, you know, it's, again, it all gets down to, you know, personal, you know what works for you personally. And, you know, for him, I mean, he became a good trader after that, because that was just that's just his thing. He just, like, you know, you walk in the morning and you're like, holy shit, that's not exactly a optimal trading mental state, is it?
Yeah, John, I was that guy. What the fuck? I mean, Gov here, David. So early in the day, I'm trading euro dollar back month spreads, and a very novice, you know, made a living somewhere else and decided I had capital to contribute. And contribute is kind of a key term, right? Because 99% of the guys who get involved in this business contribute, and they never get out. Anyway, so I heard about this thing about trading spreads in Singapore. Oh my God. I know. I was waiting for the laugh, and I'm waiting for GD to pipe in and Neil to pipe in. So I think I'm onto something. I truly think I'm capturing a spread overnight that I can walk into the morning and I'm going to have an opportunity. Oh my God. I was doing pretty well, but doing pretty well was I was basically just neutral, because the cost of doing business overseas with your clearing firm. And I failed.
Like what years was this?
Oh, John, George, you'll probably correct me. So probably 01 to 0. No. Actually, 99, 98 to 2000.
So there, you know, there was a real cost with every trade back then.
Oh yeah. Well, I didn't goddamn know. So I was doing other things. I was the 35-year-old that showed up on the trading floor because a group of guys were trying to raise money to fund this new thing with a new futures fund, of which at that time nobody knew anything about. And I was like, I have no clue what you're talking about. I'm certain if I can understand it, I can probably raise you money. So, I mean, I had already done all these other deals. So they came to me for the capital raise. And I was like, I'll tell you what, give me 3 months. Just get me one of these gold jacket, penny jackets, whatever the hell you call them. And I'll go there, I'll go figure my stuff out. So in that time frame, I came back. It's like, I'm not going to be able to help you guys out. I think I'm going to trade. I see an opportunity here. So I spent my time on the floor, brokering a little bit, not brokering, but clerking between the SPOO pit and the Eurodollar back months. And then I figured out what I wanted to do. So then comes the Singapore story. So I have my own funding. I get on the floor. I'm standing at the depths of the pits. I mean, people are throwing tissues at me. I mean, whatever shit was thrown down from the top floor, it was landing on my head. And I had a receding hairline. So I mean, it was not a good thing. It was a terrible picture.
Oh God.
So I realized that I knew that, I respectably smart guy. I was like, I know I've got to figure out how to kind of reinvent what's going on here. And I didn't know what that meant. I had no clue. So that's where the Singapore exchange was going on overnight. So I started building some positions, and I was trading them pretty well, where I actually had a base of spreads to come into the morning market when we opened at 7:20. And I had a base of a position to start, I knew that it's like, well, the spread was not working. It was like, clearly that leg you have to drop. I mean, it was that sort of thing. And then I got too big for my britches. So overnight I had like it had to been, I'm going to just say 1,500 spreads. And I forgot to enter my OCO order.
Oh,
I got filled on every fucking thing. And it was the wrong way overnight.
What was your capital base back then?
So there you go. I started off, I had a $250,000 account. And I was down, $132,000 on that 8th month in the business.
Damn.
So just on that single trade.
On that single trade, but it's because the OCOs. I had 1,000 spreads.
Oh my God!
All going the wrong goddamn way. So I reached up, and George can pipe in. I reached up, and there was one of our higher profile members, 2 shoulders behind me, Ronnie Sipple. And I was like, Ronnie, you got to fucking help me. And he's like, what? And he sees the death in my eyes. And I drag his ass out of the pit. And we go back behind the pit. And I was like, I got this problem. And I don't know what to do. I'm completely paralyzed trying to trade out of it in the market. And he said, here's what you're going to do. You're going to take your position. You're going to hand it to one of the, at that time we had brokers inside the pit, right? So you were able to hand your position to him. So I handed it to Sammy Bailey, SMB, handed it to him. And I was like, Sammy, work me out of this fucking position. And what Ronnie Sipple, the elder, what he was telling me is you have to get it out of your head, get it away from your position so that you can actually trade the active market. Well, 8 months into the business, that didn't work out too well. I mean, he was managing my positions, but I kept looking at him. I was like, any success? I mean, am I actually going to be able to be profitable here? I mean, it was just such nuanced stuff. Anyway, so here's how it ended. We rolled into the second day and I ended up losing another 60 grand. So my capital base was down pretty heavily. And, there's a major mental check moment where you're 8 months into the business and this happens to you, and you've done these other things, but they don't correlate to this. So it's about how are you able to have a sanity check and just like be able to take a break and move on from this trade? So, I mean,
that definitely would require a mental health break for sure.
While that was happening, I had another friend that was a very good trader, very smart, and a very good LIBOR trader. But this was back when Japan was the first country in the world to have zero interest rates. And he was convinced that this was 25 years ago, nobody could have zero interest rates, let alone. And lo and behold, look, we had zero interest rates 5 years ago, or 3 years ago, just 2 years ago. But he was convinced there's no way that a country could have zero interest rates. So he was trading in Singapore, and he was betting the euro yen, which is not the currency trade for anybody who's listening. It's the euro dollar equivalent of the yen. It's basically $1 million deposited in a European bank, and what CD interest rate it pays off of it. And my buddy Matt was shorting, or he was getting long the euro yen constantly on the back end of the curve, which was very illiquid. And he's like, "There's no way that the Japanese interest rates are going to be zero forever." So he would come into he would come into the pit and make $20,000 a day trading to finance his position that he had in the euro yen every day.
So basically, he was making 20 in the pit and throwing it into a pit.
Yes, exactly.
Yes, exactly. And then they got wind of his position overseas and started marking it against him. And I'm sure you know David Westcott that owned a clearing firm down there. My buddy finally sold him his Ferrari and his Jaguar and cleaned up his account. It was done, done trading. And that goes back to Sox R1's comment about a week ago. When you think things can't go any higher, they can.
No question about that. And God, that euro yen burned so many people. I know so many other guys who had that trade on and literally on the, well, you know, I'm way out on the curve because there's no way they can keep zero for this long. And deflation is a hell of a thing, and it especially can happen in a non-reserve currency. God, that's
once they found out overseas that that there was a guy in the United States that was like fading this thing, they started marking it against him every day, and it was just a disaster.
Oh my God! I mean, once word gets out, I mean, Wall Street has some very sharp knives ready for you. God, I mean, so basically, he left the building in a body bag.
Yeah, and one of the smartest guys I know. I mean, one of these guys that can figure out forward effective rates, Fed funds, the whole 9 yards. Doesn't matter how smart you are. If you're wrong, and they find out, it's over.
Yeah, that's the problem. Sometimes you're too goddamn smart. You can't get out of your own head.
Oh, see, again, that
right?
goes exactly to you got to get yourself out of the way.
I mean, I call it standing room only. It's that's it. When I have so many people in my head, I mean, I know I need to exit the room and just go chill.
Yeah, no, I mean, you can't solve the problem in the pit when you're just getting buried. There's no thinking in the pit. There's only reaction.
All right. So what? All right.
The famous woman, Large Marge, that they always referred to her.
There was
one. She was like in arm's length of David, but there was at one point where they had to basically extricate her from the pit because she couldn't say no, and she had to have her pupil. And because he knew all the banks, because that's where he came from, get her out of her position, like, and work deals on the side, and then go back in the pit and get her out of her position. I mean, she finished out.
And that was actually the agreement, that if she was going to help Jeff get into the pit. So this guy was, a newbie, but fluent in Japanese, and ended up being a Japanese desk guy. And they got him in the pit, and he knew all the players in Asia. And they would call him, and he just learned how to walk the walk, talk the talk, and trade it. So Margie starts banging him, and somehow through time they have some arrangement.
Literally.
Oh yeah, literally. Large Marge was banging Jeff, and they come to an arrangement, and the arrangement was like, I will help you out. And miraculously, it's like, you heard my story. I'm trying to get a step up. But all of a sudden this young fucker, shows up, and he's standing next to Marge. And I was like, and what's going on here? And then I find out the story. Excuse my language. And the agreement was that if she had her day and she felt it was her coming that she was out, she would hand the deck over to him, and he was completely responsible for that. And apparently
So like in old stage talk, she got the hook.
Yep. So he came in and he took over the whole position and managed it from there. So it was pretty crazy.
That is some crazy stuff that happened.
It was a massive version of what you did with Sam Bailey.
Oh, so I tell you what. So I think I told the story. But John, you're on the call. You'll appreciate this. So I'm in the corner of the pit. So the horseshoe for Eurodollars, right? Arm's reach to this, broker in the pit, Kenny Weitzman. Kenny's there. He's sitting right between Large Marge and the new Large Marge, Jeff Cardo. And they basically carried the volume for the pit. But Kenny would reach down to me on the left and say, Gov, what's here in the red pack? What's here in the 2-year? What's here in the 3-year? What's here of that? And I'd give him the market real time. And then he'd lean over, whisper in the ear of Margie and Jeff, and all of a sudden they'd launch thousands of contracts to the 3rd and 4th month to lay off their risk. And then Kenny would come back to me and like, hey, Dave, here's 500. I was like, fucking completely lost my leg in the front month. It's like, it's now down to tick. I'm in the hole. It's like, what the hell is that? So finally I wised up. He would reach down to me at the market, and this went on for a long time. He would reach down to me and ask for the market, and I knew kind of where the treasuries were, what I was going to do. So I would just launch 500 or 1,000 into the front month before he came back to me, because I knew where it was trending.
You knew what was coming.
I front run those fuckers, and there was one time I front run Marge and Jeff 3,000 contracts.
Holy
I was just
shit.
1,000. And that front month dropped a couple. So I'm sitting there and I was like, So now picture, down 3 on the day from that position. I was like, down 3 on 1,000. See if I can get anything. Maybe Margie and Jeff might hit me. Oh my God. You know what? It's all about managing diversity.
Oh my God. And so many. You reminded me of this one time in the bond pit. There was this rather large trader who he cleared through Bear Stearns, who I was clearing through at the time. Rest in peace. And he basically fronted a bunch of New Jersey Goombas, if you know, if you get the picture there.
Yes.
And so there we had this clerk that we handed stuff off that took it back to the bear desk named Kristen Weiberg, and she, you couldn't miss her. She was this flaming redhead, and so Earl the night before, or in the afternoon before, after the close, had gone and just gotten totally blitzed at the side of the trader bar at the bottom of the Board of Trade.
Yeah.
And somehow by the next morning, he had forgotten that he was net short about 2,000 bond contracts.
Oh my goodness!
How
does that happen?
And so literally, somebody said something, and the market just screams higher, and he buys like 500, and so he's standing one person over from me, and Chris comes up, and I hand her some paper, and then she goes over to him, and he goes, "God, I'm doing great. I'm long 500," and she goes, "Hey, asshole, you're short 1,500."
Exactly. It's like, don't tell me about your. It's all about the net.
Yeah, and literally, now it's just a freaking panic. You could just, the guy just looked like he'd seen a ghost, and now he's recalling, oh shit, and he's all hungover too. Great way to start the day. And next thing I know, an exchange official comes and gets him, and he was never seen again. I don't know whether he was just, they said he didn't ban him, but I don't know whether those Goombas, took him out or what. But
speaking of Goomba stories, how about before you killed it and made all the money in the crash in the late '80s, mid '80s, didn't Anthony Spilatro's son come in and sell everything that he could possibly the day before that crash in the S&P pit, and then they made him clear out all that stuff, like the mob knew that the market was going to crash beforehand. I was out with him a couple nights before that.
Oh, really?
This is Spilatro, like the famous executioner.
Oh yeah.
Yeah, he was selling everything, and he was just like a knucklehead. He was just like in the pit, and they made him liquidate his position, ran the market back up, and then the next day it dropped. I'll let you take the floor, Rogue.
Oh man, that's yes, they knew. There's no question that there was some in the days leading to what was it, October 19th. There were some awfully interesting short trades by guys who definitely repped questionable money that were just taking max short positions, and these are guys that at the end of the day always went home flat, and they weren't going home flat. So if anybody who doesn't think that there's an inside trade, there sure as shit is, and certainly it's morphed since the pits, but it's still there, and in much the same way. Let's say I'm a guy on the desk at Goldman, and I know an order that hasn't been put in that's going to get put in. Am I not calling my girlfriend and having her get in front of it? Come on. That goes on every day, day in and day out. And the way I look at it, I don't worry about it. It's just part of the market. In fact, I think just in our lives, we just have to accept that corruption is rampant and accepted.
It is. But it's also much the same with 9/11, and when you have big screens on the corner of the trading floor.
Oh yeah.
And you're watching a plane go into one building. And the question is, how are you reacting as a trader when you see the plane go into the second building? What is your reaction?
David capitalized, or Gov here capitalized on this like you wouldn't believe. I was standing on the top step because the pit was kind of empty. And I was right by Achieve. David knows who Achieve is. They Alan Eaton, and
it's a big filling broker in the pit.
The shit was hitting the fan. The first plane hit the thing, and we don't have sound in the pit. The first plane hit I thought it was like a trailer for a Bruce Willis movie. I had no idea. And
I think all of us thought the same thing.
Everybody thought the same exact thing.
All right, John, were you at the SIBO or the SIBO? Or I'm sorry, the COE?
No, I was I was at the CME at that point.
So you were the CME. Were you in the back?
Were
you in the back vent spoos?
Oh yeah, no, I was in the S&P pit, and it was just
okay, all right,
mayhem.
So we were upstairs from you. Okay.
So I was standing there, and the guy, the broker behind me goes, "What's there?" And I go, 7 bid, and he goes, "Sell you 1,000." And I was like, "Outstanding! This shit's going straight up." And then it went straight down, and I had €1,000 contracts on. I was out of like $150,000 instantly, and then the second plane hit. And and like I was like sitting there, I'm like, oh, fuck, I'm down $150,000. I'm like, and it comes right back up, and the same broker, probably with the same customer, goes, "What are you doing now?" I go, 7 offer, and he goes, "Buy 1,000." I was like, "Thank you."
And that's what and then it was like,
and it turned out the ones I had would have been worth like fucking $3 million, but I was so happy to be out, and I just walked out of the pit at that point because I was like, shit, I was down like $150,000 in 30 seconds and back to even in 30 seconds. I was like, I'm done with this shit. Fuck this. And David was smart enough to do what David's going to tell you right now.
You know what? Forget the smart. It was like intuition. The second plane goes into the other building, not an accident. And I instantly knew flight to quality. I started buying every fucking spread I could. These spreads typically trade at 1 at 2, or at that time 1 at 1.5. They were leaping by 5 ticks at a time, and I was just buying thousands of them. And then George left the pit, and there were a couple other guys we knew. I was like, I'm signaling to them across the pit. It's like, here. You can leave me fucking alone. Do you understand what's fucking going on? In the meantime, I'm buying all these spreads. So when we end up shutting down the market for like, what, guys, John, George, we shut down for 3 days.
We were closed for 2 days, and you were buying calendar spreads, which is a year spread.
I was buying. That's exactly right. And I had all those, and you know what? The market was somewhat closed. They weren't opening the pits for concern of security, but you could sell them out on, electronically. I mean, they basically, I had a lot, and they were like growing like 20 ticks every single day. It was and I will tell you that I bought a seat for membership for $539,000 the Friday before.
Oh, wow.
and I paid for the thing in a couple of days.
Oh man, God, what a story!
Crazy, right?
No,
Carpe diem.
that was
friends with David. I was like, how come you didn't tell me to buy these spreads? He's like, I don't know. I think it's because I left the pit after like
he left the pit, and I told our other friends, and they were making $25,000 a day.
I was so happy I didn't lose $250,000 on 1,000 contracts in 30 seconds.
So we have this shit going on with 9/11, and I've got like 3,700 spreads on me, and it's clipping it 5 ticks, 10 ticks. You know what? It was crazy. I don't even know if that's the right number. I'm forgetting my own damn story. It was crazy.
Well, I'll tell you what. I had come in to that day with a short position from the week before, and it started to happen, and literally one of my runners came in, and one of my best friends who lived in New York and he worked in the trade center was named Lindsay Hurtness. And Lindsay, the word was that Lindsay said, well, I'm going back in to secure the office. I'm not worried. These are the strongest buildings on earth. And that was, of course, the last words he spoke to anybody. Anyway, they just, said, hey, your buddy Lindsay went back in the building and the building collapsed, so he's dead. And so, at that point, I'm like, God, you should have told me that after the close, because at that point, I just had to close out and try to be a good human, which is not always easy. Anyway, the market continued down and downer, but so that did cut me off a little bit there.
Well, you know what? It was a pretty negative energy event, right? It's like you didn't know what was going on. I mean, my gut as a trader was like flight to quality, so I just did what I did. But I will tell you, in that leading up to that, so we had guys on headset in the pit, and they were online with Cantor Fitzgerald, and they provided a ton of activity in the back month spreads. And we had a point where it's like there were a couple of clerks that were on, headsets, direct feeds to Cantor, and all of a sudden you'd see the blank stare in their eyes.
Oh, so, yeah. I mean, no, just zombies.
It was terrible. And they were telling us to evacuate the floors, right? John, they were doing the same.
Oh yeah.
Right? I mean, they were telling us to get our asses out of there.
No, I mean, literally, they told us to get our asses out of there in Chicago. Yeah. No, I mean, it was assumed that they had planes going in everywhere.
They didn't.
Exactly.
They didn't take fees at the parking garages. They were just waving you through. They're like, get out of here. Get out.
No, they wanted to clean the parking lot out so they could get their own asses out of there.
We were all in the same building.
I got to the north side and went to my house, and there were firemen in the Jewel loading up carts with everything that they could, and it was me loading up my carts with tequila and beer and steaks and a couple housewives that had no idea what was going on. They were like listening to the girl from Ipanema. They had no idea what was happening. And I'm like, there's firemen here filling their carts. I'm like, I'm getting all the tequila I can and all the beer I can. I don't know what's happening.
Oh, literally,
that was a moment.
that was a moment. I mean, either you knew or you did know, and it's it goes to the old saying: just because a guy's panicking doesn't mean he's wrong.
Right.
I just posted in random the obit for my friend Lindsay. He was a good guy, and the reason he was a good guy is exactly why he died, because he always took responsibility. So that was an awfully rough spot. But there was some of the crazy shit that happened that day, and I mean, it was so binary. I mean, I knew guys who got wiped out, and I know guys who literally got set for life right then and there, and not necessarily deservedly so. It was just too random. And this is why we size our trades and always manage risk, because you never know when a tape bomb is going to come.
Yeah. Gov walked. He went right over to the local. I think it was the food depository or something up in his neighborhood, and donated like $25,000. He was like, "Thank you very much."
You know what? That's a fact. There. You know what? Once I reflect, I mean, it's almost like as an athlete, you're on the field, you do your job. I did my job, but instead of like, do I not get, a bag, or, am I struck out? I mean, there are monetary consequences in what we do. And you know what? You just got to trust in the gut, and you just do what you do. And then once you start reflecting that how many people are reflecting on this, that's when that idea came up, and it was a good decision. I was able to keep a little bit of peace, and it's like I provided a function in the market. All these market makers, they're all trying to get out of their position, and I honored their commitment to their business.
Well, I tell you what, that's saying a lot, because a lot of people didn't.
Yeah.
No, that's why I shared that. David and I are pretty close, and he's a good man. All right, I got to go.
Thank you, George.
Dinner tonight, guys. It's been a pleasure.
Hey,
thank you for listening to our shit.
Oh,
Georgie,
no,
your shit.
Thank you
guys. We need to have Georgie talk about his stories in the NASDAQ pit.
Oh, God.
John, they were right behind your back.
Oh.
So the Wild West, how shit flew. I mean, he's got crazy stories we got to listen to.
Oh, my God. I mean,
They took me up to the Merck court, and God bless. I'm sure Tia, that was the Goldman broker in the S&P pit. She thanked me later for catching out how they were trying to persecute me for front running supposedly in order. It's like, I was just running the cash market down. It's a whole nother story.
What did your fighting fine account look like?
Oh, I didn't fight anybody. It was okay. There was plenty of them, but everybody looked at me when I got pulled up on charges in the NASDAQ pit for front running a Drexel order, or they're like, and then it came back in the pit. They're like, "So what happened?" I'm like, "Nothing." I'm like, "What do you mean nothing happened?" Oh, so I'll tell that story another day.
Oh, God, no,
George is an animal. Okay.
I saw Tia downstairs. The ex-Goldman broker from the S&P pit. She was on the board that was trying me, and she's like, "Thank you so much for noticing that in the video." I'll leave it at that.
Oh, my God, that is too good. And I never initiated by punching, but if somebody punched me, they got their money's worth.
Yeah, I've seen plenty of guys do it. I've never had to do it. I was loud enough that I could make them fucking back down.
I think the best I had, where I had two guys, one local, accusing me of getting his trade where he made the market, and he rushed down to me. I mean, it's like he knocked over a couple of guys, got in my face. He yelled at me and all this. I was like, first thing is, make sure you have your facts straight. And if you think you have your facts straight, we can probably come to a decision here. Like, if you don't like what I'm saying, bike rack at 4. And I mean, I don't know. The 2 confrontations, and then I had this big ass broker that Billy. Oh my God, who is that? Corrigan, Flanagan, George. Who was that? In the corner on your left shoulder. He leaps the goddamn rail and comes down rushing me, and he literally. There's like 30 people. He completely wiped out, like it's a big fucking bowling lane. He completely wiped them all out and comes up to me and is like, accusing me of something. And it was the same thing. I was like, are we going to the bike rack? I don't know what to say.
You know what? Sometimes
both situations fell completely flat. They didn't say shit. I mean, they both just walked back up, quivering their tails.
Sometimes just like responding with calmness, like they're like, what?
My favorite was when somebody get in my face, I would just go, "You need to change mouthwashes."
There you go.
That would and that would always catch them by surprise because they were expecting their fuck you to get a fuck you back.
That's exactly it. And the same points here, right?
Yeah. No,
it's funny. Oh my God.
All right, gentlemen. You guys have a good night.
All right. All you guys too. Yeah. Sorry we're boring you.
Dinner time, and these are great stories. And I mean,
dinner time in Chicago.
Hey, you guys who unfortunately didn't get into trading until the pits didn't exist anymore. I'm just telling you, you missed one of the great life experiences that was ever available to a man. That's for sure.
I would say to that.
And by the way, I was never more physically fit than I was there either. I mean, and that was without going to the gym. It just you expended so much in the pit that I mean, you could eat 5,000 calories a day and it wouldn't touch you.
But also the key thing is you need to maintain your physical presence in the pit.
Exactly. I mean, if you're not in the pit, you're out. You're not in the pit.
Because I was the same way. I was the best condition I had ever been. Oh yeah.
And you have to maintain your voice.
Oh God,
there is so much shouting. Like
my wife always, is telling me to, hey, lower your voice because my voice is permanently adjusted to pit loudness. There's no getting around it. Once you have it, it doesn't go away.
But I'll tell you what, my ears are not the same.
Oh God! Don't even start me on that. What did you say?
Right?
Oh God!
Oh my God! Crazy.
All right, guys. Well, thanks a lot. Let's do this again, and let's get some of these great pit guys lined up here for one of these because I mean, again, it's a life experience that at least you can't experience it, but maybe you can vicariously.
Well, thanks a bunch, John, as always, for doing this.
You're welcome, Rich. Thanks.
Thankfully, we have it recorded.
Thank you, John.
And thank you all. Yeah. Thank you all, guys.
I think our next upcoming event might be SOX doing a talk on complex options. I'll have to check the schedule, but for some reason, I think it could be next week. I'm not sure, but I'll check on that and let you guys know.
Okay. Thanks, Rich.
Have a good night.
Shit, John. Good shit.
All right, you guys. Take care, buddies.